Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're going to go over the red that is creeping into the market. Of course, you do see a pullback on many coins in the crypto sector there, but it's not too bright red. A lot of the gains that have been being made are basically overwhelming the setbacks. But if we do take a look at the S&P 500, we can see just how red has creeped onto the charts, and what that means potentially for us going forward is that there could be some pullbacks on the stock market. Nothing is written in stone yet in terms of whether or not the summer rally is canceled. But we are getting a little bit of troubling signs with regard to the economy. Specifically, we got, our global services PMI, and it was significantly lower than expectations. Now, that can be problematic. It can suggest a troubling downturn in the economy. Although manufacturing basically kept pace with expectations, the service industry is taking a hit, probably weighed down by inflation and other things. This is just going to put pressure on the Fed to get inflation under control. Okay, so right now, again, it's a fine juggling act between whether or not the Fed is actually suppressing the market itself by increasing rates, too fast, too hard, which isn't a bad thing if they had done it like a year ago or 2 years ago, right? Just to kind of slow us down. But now that they're doing it while we're also having some recessionary issues, that can be problematic, and it's very, very difficult to deal with both of those issues at the same time. And so you're starting to see some sectors take a hit of the economy. And the US is heavily a services economy, so we do not want to see these numbers going down too far. That is going to spook the markets, and again, that's why you saw all the red on the charts that you did in the stock market, which of course is limiting crypto just a bit today. If we do just pop over to the charts, we can see Bitcoin is taking a pretty strong pullback. Now, guys, I think you'll remember in the last episode I did mention that this was highly likely, that I wouldn't be surprised by it, and that even I wouldn't consider it bearish if we had a pullback to this level. Now, look, you see my little marking here? I have marked it out right there, and we actually have the pullback all the way down to that level. So what I don't want to see us is violating that area. If we do just to zoom out a little bit, you can see that we have, this natural channel that we've been carving out, which we broke out of, and we retested it. We got heavily rejected by the weekly 10, basically the weekly 10 EMA, which is too bad because getting on top of that weekly 10 EMA just would have been incredibly bullish. But you don't always break through an EMA on your first attempt, and so we did. Pop back down to support, which was awesome because it confirmed the weekly 200 MA as support. And then we got rejected again, unfortunately, by the 10 EMA, and we've just come back down to that support, almost reconfirming it as support. Of course, we will need a bigger closure than just a 6 hour. We'll need something like the daily to close here to make sure that we're not going to break back down into this area. But so far, so good. We are seeing the buy pressure in that area, so I'm not too concerned. Right now, I would just consider it a chance to buy into some of those coins that perhaps you missed out on when we pumped to heaven on this previous pump. But you would be forgiven to having a pretty tight stop loss, perhaps around 22,000, 300 in Bitcoin terms, whatever that means for your coin, right? Just around, you have to imagine the equivalent for all of these altcoins that you might be in. They're all probably experiencing a very similar behavior. some type of channel, some type of breakout that's really bullish, and then maybe a check back or whatever. And so if you're buying into this level, you just want to make sure that you're putting your stop loss, under this support that hopefully holds, right? And again, for every coin, it's going to look a little bit different, but the overall pattern should be pretty similar. And here we have a significant, hold by the weekly 200, and just hope that we can keep that. Of course, we're not in any too serious trouble until we start breaking down below 22,500. Then we have the chance to get squeezed further, and then I'm not too concerned until we break 21,700 on the Bitcoin chart. And then I'm going to think, things are pretty much going the wrong way. But for me, I think I would front run that probably at 22,350 because again, I don't want to lose the weekly 5 EMA. I just don't want to squeeze to the downside by any chance. But you guys can figure out your own stop losses and your own risk metrics. I'm not here to give you any type of financial advice as what to do in the market, but just to share my opinions as a continuous learner, trying to improve my own trading skills. Just trying to share with you what I think the market's doing. None of this is financial advice. But again, it is nice to see that my target did hit here. And so, if there were some purchase orders to have been made in whatever coin you were in along that type of diagonal that we seem to be, just printing, then that would have been the place to buy if I were doing that. Let's see. Going over, some of these metrics, I did move the lines because, of course, we did have updates. Some of them got moved up significantly, as, of course, the chart is printing in more candles on this upside, so they are going to naturally be moving up. And so you can see that we are out of the, strictly speaking, we're out of that bullish area right now. And so there is a little bit of a weakness on the charts compared to if we had just held this area, right? If we had just held above 23,000, it would have just looked incredibly bullish, right? Just kind of doing something like that, maybe, right? And, we would have been basically putting in an accumulation wedge to the upside. But the fact that we are basically breaking down, it's not bearish yet, but I am telling you, of course, you're going to want to manage your risk in this area because it's not a bullish formation. We do have a kind of actually bearish M here, which could continue to break down, especially the fact that this is a lower high than this, this higher high over here. So that does suggest just some type of middling. Just this is kind of like an indecision wedge. Just kind of middling here. Hopefully we come back up here into that blue zone and then we break out to the upside. And generally speaking, that's what we should expect because the overall thrust of our candles are to the upside. And so, just if you're taking a bit of risk, which you always do in the markets, for me, it's basically, leaning to the upside. Although we have to be highly aware that we do have this resistance, you know, um, this pretty solid resistance right here. And we will need to eventually break through that, or we are going to get pushed down, especially if the rest of the markets show weakness. Jumping over to, well, let's go ahead and take a look actually at the CME charts because, the CME charts were doing something quite different than Bitcoin. The CME charts here, you can see they're 200, we're between the two 200 EMAs right now, and we're actually losing the 200 weekly MA. So that's not actually what we want to do. We really want to hold on to this area. We've still got that diagonal pretty much held together, but I don't like that we're breaking below the weekly 200 MA. I don't want to close under the weekly 200 MA. If we jump over to the weekly, you can see what that might look like if I just throw on our EMAs. And yep, see this orange line right here? Just get rid of that stuff. See this orange line? You see how we basically got rejected from the from the 10 weekly, just hard rejected from the 10 weekly, and then we again got rejected from the 200 EMA, and right now we're being suppressed under the 200 MA, moving average, and we're just barely hanging on to the 5 EMA. So guys, this is a little bit it's not the best look. Let me put it that way. It's not the best look, okay? We definitely don't want to lose this 5. I don't even mention the 5 usually because if we lose that, then we're pretty much just headed down. And you can see what that looks like. Here we lost the 5 and we just like we got shot down to hell, okay? Here we lost the 5 and we got shot down to hell. So don't disregard the 5. Okay, this pink line right here, we lost this 5 and we got shot down to hell. Now, my friend Crypto Retta, he uses the 10 for effectively the same purpose, but I find the 5 to be a little bit more responsive, especially in this just current macro atmosphere. And so, really pay attention to whether or not we get underneath the 5 on the weekly, and you're going to get a little bit of an extra heads up. But even so, using the 10, this red line, um, you can see it's looking very similar to this rejection area. And of course, when we got under it, we got rejected heavily up here, the same as this long path down. So guys, just be aware that we're still in a very dicey territory, and unless we can convincingly put in a couple candles, like 2 or 3 candles, in this $24,000-$25,000 area, we're not likely to see some type of like mega squeeze to the upside or anything. We're basically just hashing out this area. And, I can't even see why. I mean, yeah, I mean, I guess if we do defeat the 10 EMA on the weekly, that we could see up to that $30,000 area, but yeah, we really have to recover this squeeze right here between this 200 and the 5. It's really important. So, yep, just pay attention to that. Going back to the lower time frames, again, like we don't want to be breaking this neckline here. If we are going to hold on, like we need to hold on right here. This can easily squeeze to the downside on the 6 hour. On the 4 hour, it already is squeezing to the downside, but of course we have this kind of neckline in this kind of support zone here. See this wick, see these wicks over here, see this kind of these candles over here. We have support here. If we bounce, that's going to be just great. Like that's fine. Just we checked back. We want to get above that 23,000 and just kind of chill above 23,000. I don't like, I don't like this candle right here, and I don't like these EMAs curving down on the 4 hour. Not a good look in my opinion, but again, we can recover from this. Just don't be surprised if we get shot down, perhaps first to 21,800-ish, right? Where you see the 4 hour 200. So maybe 22,200, 21,800, and hopefully we bounce off of that if we are breaking down. But yeah, unfortunately, markets are taking a little bit of a negative turn here today as the services sector is taking a hit. So we're going to have to watch out for that. Going over to Ethereum, we can see pretty much the same thing. It is hanging on a little bit better, but right now, that just looks like kind of like a check back, so I'm not sure if it's fully hanging on or if it's just, I mean, if it's fully recovering or if it's just like checking back, right? So we're gonna just want to keep an eye on Ethereum. As far as Ethereum's levels, uh, well, we do have this zone here, which you can see Ethereum has a pretty nice channel, right? Like this channel to the downside. pretty nice channel to the downside. But it also has this middle zone, right? This kind of middle zone that it just bounces off of, or it gets thrust under, right? So it either has a bounce or it gets a thrust under there. It just kind of wraps around there. So here, up here, you can see that we, kind of bounced around on the top side, bounced around on the bottom side, bounced around on the top side, bounced around on the bottom side. And are we going to start to bounce around on the top side? That's the question. Now, bouncing around on the top side could actually bring us down, right? You can see the overall movement of this middle channel, this kind of white kind of zone that I have marked out here. It does bring us down as price action hugs it. And for whatever reason, of course, the price action just is gravitating to it as a kind of mid channel on its overall path to the downside. Some type of a mean reversion, right? Just returning to the average of this price action. And so again, like if we do see, Ethereum just chopping down, you know, don't be too surprised because that's what it does. That's what its behavior does. There is no reason why we have to just pump up to 2000. Simply, if we did hold on to this area, there would be a high chance that we could actually get up there. But there is no guarantee that we hold on to that level. Let me go ahead and just zoom in a bit, and we can just get an overall idea of where we are in terms of our bullish zones and our kind of bearish zones. Right here, I would say this is kind of our support, right? Like we don't really want to lose this area. If we do, then it's almost guaranteed that we're going to be breaking down much further. But ETH pumped so hard, maybe we can even just count it as this area. But that's a long way to fall, right? So I don't know. Just take these one at a time, I guess. The first one, I mean, yeah, I mean, this is such a weird pump, man. It's just such a heavy pump. It could easily retrace all the way back down. You can see the diagonal that we have here for on ETH, right? It's something like this. Just get a little bit more color on that. It's something like that. And so you can imagine that we could easily come back down here and then, chop around this white area. But oh yeah, you can see this zone right here, it actually does match up with the middle of that white zone that I have set up. So, which we were just talking about. And so, yeah, if we did lose the middle of that white zone, yeah, that could suggest that we're breaking back down. So I'm going to keep this here. That actually does make a lot of sense if we consider, how ETH behaves in this kind of weird choppy style. So we do want to hold on to this area. So really just watch out for that kind of 1400 area based upon ETH's behavior. If we lose that, we can easily chop down, significantly lower. But I do consider that a fairly supportive. And then, of course, our daily stoke will break down around 1520. So if we do lose 1520, with a convincing candle, just watch out because then we might be testing these areas, right? And ultimately, we don't want to be breaking below 1360 or we're going to have a 2-day kind of downtrend. What I want to see us is getting back up into this 1550 area. That's going to be a much better look for Ethereum, especially if we can capture that 200 EMA again. Something like this. Let's see what color I can make that. Is that what I'm using for Bitcoin? Yep, blue and green, okay. So this is just going to be kind of a bullish area, and then this is our support, right? And then again, we do have this zone of resistance overhead, so it makes sense that we weren't able to just break through it on our first try. And if we do end up doing something like this, just kind of like, kind of freaking people out a little bit, and then trying again, like maybe then we can break through, assuming that we're going to continue to be bullish. Again, based upon the Bitcoin CME chart and based upon the Bitcoin chart, I'm just not sure that we have to keep pumping, right? Like it could be that we just enter this point where we start chopping around to the downside. So again, be very aware that we do have, let's see here. If I put on this macro, see this downtrend. Now we don't actually have to break back into this downtrend in order to be smacked down. Like some people might just think that we're bullish just because we're breaking above this overall downtrend, but that's not necessarily true. We do have this kind of a line right here, right here. Let me go ahead and can I get rid of some of that? Yep, good. So you can see this one that I just drew right here. When we did break down on this chart, this huge breakdown, we effectively lost this yellow line. In fact, just to not confuse it with that channel down there, I'm just gonna make it white. So we lost this white line, and this white line, it looks like it has a pretty strong history with Bitcoin. Yeah, all the way back here. So yeah, don't mess with this white line. All right, like we need to get above that white line. This is a very dangerous line, and I want to show you just so you can imagine. Look, we lost this white line, and we broke all the way down here. We lost the white line, and we broke all the way down here. We lost that white line, and we broke all the way down here. When I say lost, I mean we never, captured it. And look, we're losing that line. So is it possible that we could just break down? And yeah, maybe we're overall, rounding out where, this was pretty vertical, this was a little bit more sideways. Maybe this one's going to be a little bit more sideways, maybe even stay above that red line. But just to be aware that this is a pretty significant line right here. I'm not making stuff up. You guys can see the behavior of the price on the chart underneath that line. So just be a little bit cautious right now. We have to break above this line. It is acting as a kind of natural, I don't even know what to call it, like a deflector, a natural deflector, where anything that hits into that white line, boom, boom, right? Okay, you broke above it, good job, but you broke down, boom. Try to get back above it, smack down. Try to get back above it. Are we going to get smacked down? Like this line is really important. And I think most people are probably going to be thinking about this line right here and thinking about how we could pump all the way up to 30,000. Because if we get on top of this this line, yeah, then that's definitely possible. But if we're rejected by this white line that just rejects people all of the time, then we're not getting up here. Like we're not even going to get close to there. We're going to get smacked down. So when I say that this is a dicey area, when I've been giving warnings in the last couple of videos that you wanted to be buying in at that, $19,000 level with me when we were buying down here. You don't necessarily want to be buying your positions so close to resistance. This is a very significant thing And you guys are going to want to pay attention to this because in the past, again, this line has not treated us well. You can call it whatever you want. You can call it a mid channel, you can call it a mean reversion, you can call it a, you know, whatever. You can just, but it's obviously there. You see this price action just being rejected off of it, rejected off of it, rejected, rejected, rejected. Doesn't even come close, it gets smacked down. Doesn't even come close, it gets smacked down. Smack down, smack down, smack down, smack down, smack down, smack down, right? Just be careful here. Just be careful here. Again, like this is an area that you kind of want to take your profits, and only until you're sitting on top of it, then can you feel a little bit more comfortable that you might pump to the top of this channel. So I'm pretty glad that I found this. Um, most people don't draw resistance lines the way that I do, and so most people won't see this line either. So you're getting a little bit of alpha there, but just be very careful of this line here. It's diagonal. But if we do get ahead of it, let's say that we get up to 22,000, let's just say 700, and we kind of hang on to that 22,700, that $23,000 level. Just zoom in just to get a little bit extra here. So it depends on the timeline, right? Like when do we make our way back up to there? But just assuming that's not a straight path, then it's going to be 24,000. We're going to want to capture 24,000 very solidly. And if it's a little bit later, then maybe 23,500. Like if we just chop around for a couple weeks, something like that, then maybe that's 23,500. But 24,000 is really the number that I want to see on Bitcoin in order to think that we're going to pump to heaven. Just if we look at the history of this, and I want to see a couple good closures above that level. Otherwise, strong chance of rejection. Okay, just strong chance of rejection. And you can see we're kind of doing a similar thing here. We had this little area, we have this little area, right? Pumped up, and then created a little wedge, which then broke down, which may break down. So, guys, I think I'm going to end it there. There really isn't much else to say except that we do have to just continue to be on our toes. We don't want to, get lazy and just follow the narrative of everyone saying that we're going to pump to 30,000. It doesn't have to be true. It doesn't have to be true, okay? Like it can be a fake out. This can just be a bear flag, going to take us one step lower, maybe not as deep as people think, and maybe we start to round out, or it could be deeper than we thought, right? So just be ready for everything. And again, you don't want to be like chasing the pumps. If we already pumped, you could lose, your money if you're not managing your risk very well. Again, the place to buy was to take that risk at like a 19,000, right? In this mid 18,000s when we were down here on the confirmation of the higher low, when we had a couple confirmations even, like that was a really good place to consider to be buying for trades. But buying up here, you're buying the deflector to the downside. You're going to have to wait until we're on top of it to be a little bit more confident, right? That would be that $24,000 area. Now, you can say that we're on top of this, resistance, which has now been made into support, and that's good. It's just, again, manage your risk very carefully because we can easily come back down, right? Let's just go ahead and just briefly look to see what's going on in the stock market. Okay, that just looks like a bullish check back so far. Again, I'm not trying to scare anyone. I'm just trying to be realistic. Again, this one looks just like a bullish check back. Nothing serious, just still on trend. That's the Nasdaq. So the S&P S&P also just kind of bullish checkbacks, making kind of a broadening channel here. I'm not sure what that's about, so just watch this one. This one, we don't want to see this round and just break down or something. We are actually I don't know if that would be considered to have totally filled that gap, but I'm going to count this gap to be filled. It's filled enough. So it didn't hit it precisely, but it got it pretty good. Consider that the market having checked it already. So if we did break down and then went for these like lower gaps, don't be surprised. Okay, if the market just turns around, next week and heads for these lower gaps, don't be surprised because it filled in the upper gap. It's the S&P 500, right? This is the SPY. And so look, there's more gaps to be filled here. Why do I have that as a gap? That must be like an hourly gap. Yep, like on the lower time frame. But this one's a 4 hour. It's also a daily. So we have these kind of daily gaps here. Kind of a really thin one here on the daily. But then we have a pretty significant one right here. So this is really the one that they might really go for, if they do go for something. And you can imagine what that might look like. If we do have a trend line from here to here, right, then that trend line extends down. And maybe a kind of check back could be something like this, right? And then maybe we go on our way, something like that. And this could really terrify the markets, but it would fill this gap, it would fill this gap, and then this one just may not be that significant. I'm not sure, but it would get that pretty important gap right there. So be on the lookout for that. We probably also would be limited by something like up here. So yeah, let's see how VIX is doing. VIX continues to come down. Like that should be better trading. A little bit of a pump up, just a little bit. Maybe on the half day, something like that. Yeah, so let's go to the 4 hour. Yeah, there was a bit of a pump. Just looks like a check back. Dollar again, like it wants to find support here or something. Like it just pumped, giving people a headache today. It did wick down, so it could continue to break down. That would be good. That would be good. Let's just follow this. It could continue to pump a bit. Maybe check back on this green line or something before dropping again. But this thing has been pretty chaotic, so let's just watch it as it is. And then I guess we can understand that USDT is probably pumped. Yep, making a little bit of a W there. So what we don't want to see is USDT just kind of like chopping its way back up again. We did hit that 6.15-ish area I was talking about. And so, we could potentially deflect back up. Okay, this market could tank from here is what I'm saying. The crypto market could tank if this USDT just goes back up, right? But maybe this thing will continue to break down. Maybe this thing is going to go like down here, and then we could see just like the crypto market, skyrocket actually. But I don't like this higher low, right? This was a low and this was a higher low. I don't like that. However, right now we only have a lower high, but this move might not be done yet. So again, like it could be something like this. And so we could have some more pullback to go. What I would prefer to see is something, I mean, even that's going to make like a double bottom, So just to watch out. Something's a little bit dicey on the charts right now, okay? I'm overusing that word dicey, but just watch out, guys. Like, protect yourself. And then let's just briefly check out KDA. Unfortunately, KDA did check back underneath the red line. So, guys, the mid channel held. That the mid channel held. We've now had one play to the 180 area. Let's just say 185, and then a short to the mid channel, and then another play to 185, and then a short to the mid channel, and then another play up. It didn't reach 185, so sorry, I was wrong about that. Can't win them all, but hey, like 2 out of 3 ain't bad, right? And then we got to check back to the mid channel. And so we really want to see this mid channel holding. There is a lot of pressure on that mid channel now. Um, Again, guys, Kadena is just going to follow the rest of the market. It's not like Kadena is a market leader, okay? Like, don't get anything like in your head to think like Kadena is a market leader. I've made some videos about Kadena. It is bullishly postured, but when I see a wick, like when I see this low being lower than that one, okay, we're just retesting the mid channel here. But then when I see this low being lower than that one, being lower than that one, now we've got a downtrend. And we're also pushing down this wick into the lower half of our channel. And so what I'm afraid of is that scenario might be coming up where this was just a fake out and then we just end up chopping down, and maybe testing our lows again, right? I don't want to do that. But for Kadena, there is something that we did which is good. We defeated, we defeated this kind of a downtrend area, right? We bullishly popped up above that, as well as recovering this one at the same time. And so we did prove that we can get above it. And so that does suggest that, if we do find maybe a higher low, we don't just test the bottom or we don't break down, it does suggest that we have very much weakened this line and that in the future, we could be, setting ourselves up for this kind of, perhaps bullish movement on Kadena. But guys, just to be realistic about this market, there's a lot of limitations on it. There are a lot of moving parts. There are a lot of considerations from the U.S. economy to Ukraine to Russia to China's supply issues to the Eurozone, just being crushed by different market forces. And then, of course, we are in a macro downtrend. So on average, playing to the downside is going to be more likely than playing to the upside. We can dream about these type of levels, but again, like we have to clear 180 first. And we definitely don't want to be poking holes in our mid channel to the downside. That's, you know, it is what it is, guys. Like, if that's what Kadena's going to do, that's what Kadena's going to do. We want to recover that red line and we want to sit on top of this 165. We don't want to be hanging out around 160. I told you guys, like 160 is, we don't want to be hanging out under there. And sure enough, like Kadena came down to 160 and just held on for dear life. So that was the correct answer, but it just wasn't the play that I wanted to see happen. Um, let's see if we are just going to continue to trade this range, which is actually pretty good money if you can just, if you can just buy here and sell up here, right? Buy here, sell up here, buy here, sell up here. Like that's actually really good money, right? Short here, right? Like that's worked out pretty well. And so usually the market doesn't let something that easy, like they don't just create a money machine for you that way. So that does suggest that we're getting closer to either a breakup or a breakdown. And the reason you want to be on the upside of that mid channel is because you want to break up, right? Like if you're bullish. But if you're shorting or whatever, then I guess you want to be on the bottom to break down. And again, just to remind you guys, if we do break down, again, we have that 80 cents level down there. ADA, basically similar story, slightly different formation. ADA never really got over its mid channel. If we just kind of carve something out for ADA here in the middle, it's just kind of poking around in that area. It never really got above it. So again, I'm still looking for it to, basically hold 55 cents. But again, it's doing well above 45 cents, and we did prevent ourselves from just like a chaotic breakdown to maybe 17 cents or 25 cents. Okay, so maybe ADA is gonna make it. You know, it's looking okay-ish. But again, like poking down below the mid-channel area, it suggests it might try for 45 cents again. It could even try for 43 cents again, and hopefully it doesn't continue to poke holes to the downside. Otherwise, there are these lower 30s and 25 cents to look at next. But it just depends if the market stays bullish. Okay, let's look at the since it's not as clear as Kadena, let's just look at the EMAs. Still above the daily 10, so not terrible. Not terrible. If we can just bounce from there, pretty okay. Kind of a nasty wick there, but you don't really want to go too much lower than that. And you definitely don't want to go below 47 cents, I'd say. Below 47 cents, you're really kind of squeezing to the downside, and you may end up testing those lower 40s, okay? Let's see, anything else? I've been monitoring ZIL. I screwed up in this trade a little bit. I bought in on a little bit of FOMO because my friends were in this one, and I've just been having to wait to recover. I got a nice wick here that did bring me back to my entry, so that was fine. But then I bought in lower, and then we just end up breaking down again. So, guys, like no one's perfect. No one can like know the market 100%. I'm a human being also. We are breaking under this like little trend line here. It's okay. We've done it before. We can like pop back up. But I would just be worried if we lose this zone. Like if we lost 39 cents. That could be a pretty interesting fall down to like 36 cents. So if you're in Zilliqa, just manage your risk here. Zilliqa does like to have these just chaotic moves. Okay, just pure chaos, like just total retracement, right? It's like just total retracement, right? So we are on an upswing, and this was my mistake. I made a mistake. I shouldn't have, I shouldn't have just tried to get in on a pump like this. I should have understood that it was more likely to just have a total retracement, right? Something like this, or at least 1/3 of the way down. Okay, so when I enter my own trades, I've got my emotions pretty well sorted. But guys, like sometimes you see like your friends being in on a trade or something, and then I don't know what it is. It's like the grass is always greener in your neighbor's lawn, right? Like your grass never looks as vibrant as your neighbor's grass does. And so you go for something like that, and then you take a loss that way. So if there's a place that I can improve on myself emotionally, it's to stop worrying about like what other people are getting, or the trades that other people are in. If something's pumping and you missed it, you missed the entry on it, don't don't FOMO the pump just because your friends, your peers or other traders are are following that, are in that, right? Like whether it's GMT, or whether it was Luna, or whether it was, Sol, or any of these things. If you see this stuff like pumping, whether it's Ethereum, right? Then then just understand you missed it. You missed it. That's all. Wait for a pullback, or find a better entry on a coin that, either has just retraced itself, or hasn't launched yet on that same move, right? Because these coins kind of take turns, right? They don't all fire at once. It's sort of like they cycle through the major coins first, and then they get to the more obscure coins later on. And so there's always another coin that can pump, and you don't have to be chasing that. Uh, you know, if we do stay bullish, then this type of a level probably would have been a safer area to buy in. Um, ultimately I can see that there is some type of trend here, and so, just if I'm just a smart person, I honestly would just ignore this completely unless we got to a price something like 38, or we're kind of curving up this one, right? So you can see the price action kind of getting wedged in here, poked out of the wedge. That was a bull sign. So, so of course I tried to get in this area, more or less broken even right here, but I was in a little bit of a loss. And, you know, depending on how it checks back, if it's bullishly going like this, but the problem is it can break all the way down here and then break down. And then again, like this thing just fully retraces, and sometimes it goes lower, right? So, like, it doesn't have to pump. It can go lower, right? You see this, right? It can go lower. So yeah, your entries are really important. And just sharing a mistake that I made. Again, like we had this huge pump, but we retraced and we made a lower low, right? So just be careful. Like don't chase pumps in a macro downtrend. You're going to end up on the wrong side of it, right? In a bull market, it makes sense. Like in a bull market, you can be reasonably assured that it's going to come back to your price eventually, as long as the bull market continues. But in a bear market, you might never see that price again. So you're going to want to manage your risk really well. Anyway, just putting a little bit of a human touch on those things. I make mistakes too. And, this is a process. We're trying to be lifelong learners here at Alpha Commission. Of course, you can join us in the Discord, or you can leave some comments. But, guys, just watch out today. Let's just pop over right before I head out. Just pop over to Bitcoin, see if anything's going on. And we are just holding that level. So hopefully we don't continue to break down. But stay on your toes, guys. And that's your alpha for the day. Stay safe and happy trading.